Hey, what's going on everybody? Brian here, and today we're going to talk about 5 ways to avoid failing at day trading. So to give you guys some context, I have been actively day trading the stock market since 2014. And so because of that, I've acquired many gray hairs and nuggets of wisdom that I'm going to share with you today. I also have a unique perspective in that I actually run a CPA firm that specializes in providing tax services to active day traders. And because of this, some of the pitfalls that I've gathered are things that I've either personally experienced myself or I have seen clients go through something similar. So with that said, let's run it. What's going on everybody? Brian Rivera, CPA, and I want to welcome you to my channel. On this channel, I typically talk about personal finance, entrepreneurship, and investing. So if you're new, don't forget to hit that subscribe button. Before I get into the 5 tips, let's go ahead and address the elephant in the room. Do 90% of day traders actually fail? Well, I can firmly say that that number is not accurate. I have seen a whole lot of data over the course of my career, and I can tell you that 90% of day traders do not fail. I think a more accurate statement is 90% of day traders quit. Day trading is freaking hard. So a lot of people think that you can just pick it up and run with it right away. In actuality, it takes a lot of work. The way that day trading ropes you in though is that it's easy to make money, right? So you can actually place a few trades and be successful. Now all of a sudden you're a trader. Where the difficulty or the skill comes in is that keeping that money, right? So it's not hard to make money, it's hard to keep money, right? And the psychology and the greed behind it tells you that, hey, whatever you did today is not enough. So you keep pushing and you keep pushing. And next thing you know, you lost a whole bunch of money. So to sum it all up, I don't think 90% of traders fail. I just think 90% of traders quit. And that is because it is hard. It is a mental grind and you have to stand the test of time. My mom used to always tell me that if it were easy, everybody would do it. And so it doesn't matter what it is, whether it's medical school, law school, you're trying to become a CPA, you're trying to become a day trader. If it were easy, everyone would do it. And that's why the barrier to entry is so high. It's because it's not easy and not everybody can do it. Reason number 1 is going to be insufficient capital. So as the saying goes, scared money don't make money, right? You got to risk a little bit to earn a little bit. Depending on the market that you trade and the skill set that you possess, you are gonna need a certain amount of capital just to be successful. For example, if you trade the equities market or the options market like I do, you need at least $25,000 or more in your account to satisfy what's called the pattern day trader rule. Pattern day trader rule basically says that, hey, you can only place 3 trades in a 5-day window if your account balance does not exceed that threshold. And if you make one bad trade, you're all of a sudden, you're now below that threshold and you can no longer trade freely. You're now stuck with 3 out of 5 trades per week. So in my opinion, starting off with something like, let's say a $30,000 account with a 2% per trade risk would basically mean that every single trade you're risking at least $600. Well, theoretically, you could be wrong 10 times in a row and you would just be slightly below the pattern day trader rule, meaning you would have lost $6,000. But 10 times in a row gives you a chance to be dangerous or to be successful. Now, that's not applicable to all markets. That's specifically to the equities market. I know on the futures side or on the Forex side, there's a lot of margin that you can use. So you may not necessarily need an account as big. However, whatever market that you are trading, just make sure that you have sufficient capital, because if you don't, you're not going to give yourself a chance to survive. Reason number 2, risk management. Hands down, the biggest danger, especially to the new trader, is not having any risk management parameters or protocols in place. I think the reason behind that is because many new day traders are very optimistic. They're green, they're brand new. And so you don't know what you don't know. And so you're not sure where your skill set truly is. So a big rule of thumb I would recommend that you have some variation of is figure out how much you're willing to risk on a trade and how much do you expect to make. So if you are risking X, then you should be making either 2X or 3X. So in that example earlier, if you're risking $600 a trade, then on a minimum, you want to make sure you're making at least $1,200 or $1,800 to offset that particular risk. But that number looks different for everybody, right? So a seasoned trader, that could be 5,000 or it could be 10,000. So you just got to figure out where you're at in your trading journey and make sure that you stick to it, because that is how you give yourself a chance for long-term success. So now if you don't trust yourself, there's other things that you can do. One is you can employ something called a stop loss. So what a stop loss says is that you can set it at the broker level to where, hey, if a stock hits a certain level and the position is going against you, the trade will automatically execute, no questions asked. Signed, sealed, and delivered, you're good to go, right? You have to make sure that you place that order though, otherwise your stop loss will not trigger. The other thing that you can do is there are some brokerage firms that offer something called auto liquidation. What happens is you can set a max loss on your account to say, hey, on any given trading day, I should never lose more than $5,000. Well, if you set this at the broker level, once your losses hit that number, you will automatically be liquidated from that position and you can no longer trade that day because you set that thing in place so that way you are safe. Now, as you get more experience, you may not necessarily need that, but in the early stages of your career, these types of things are going to help you keep your risk management in check so that way you are not part of the 90% of traders that supposedly fail. Reason number 3 is going to be trading review or strategy review. So as a new trader or as a beginner, you may not know, but one of the most underrated things that you can do to ensure long-term success is to review your trading data. And how you do that is through employing a trading journal. So now there's software that you can use, there's Excel documents, PDF documents that you can use, but this is gonna help you tag and track your data. So the reason why you're gonna wanna track your data is because you're gonna be able to measure things like trading performance, trading habits, trading setups, what you do well, what you don't do well, having a set of rules so that way each day you can grade yourself against how you actually did. So I remember when I first started trading, I literally was spraying bullets all over the place. And that was because I had my first account. I was super excited. All I wanted to do was trade every single tick, every single minute. I had to be in a trade. So I was just randomly spraying bullets. Well, after successfully blowing one of my first accounts, I took a step back. And what I said was, okay, if I'm really gonna do this, I need to treat this as if I were a professional. So what I did was every single trade I had an identity. So what type of setup is it, right? And so I would tag every single trade I took in the beginning, and I would assign that particular strategy to it. So then after that, I could filter each strategy or trade that was associated with a strategy. And basically I said, hey, if this trade was not at least 50% effective, I threw it out the window and I didn't touch it again. And I only focused on the trades that I was at least 50% right. Because if I have my risk in check, if I'm risking 2 to 1, 3 to 1, and I'm 50% right, that is going to extend my shelf life in this trading game. And so it's extremely important that you understand what your strategy is, you tag your data, and you follow your plan. So there's automated software that you can use, and there's also a PDF document that I like to use. So what I'm gonna do is I'm gonna show you one of my last trades that I took the other day. So the actual trade that I took was a company called UPST, right? And so UPST was an earnings play, and I love to trade earnings. I know a lot of traders hate earnings season. For me, it feels like the Super Bowl because there's a lot of stocks that trade range bound, and during earnings season, that's kind of when they break that range, and you can truly see if the demand for that particular stock is there. So UPST was an earnings play. So revenue was up 60% quarter over quarter, which is a good thing. So management guided Q3 revenues of 205 million, 215 million with a year-over-year growth rate of 220% at the midpoint. So they also updated their revenue guidance to approximately 750 million, representing a growth rate of 221% up from the 600 million indicated last quarter. So obviously these bullet points are great, but a lot of times when a company guides revenue a little bit higher, it's extremely bullish and I want to be a part of it. So my setup was I like to trade what's called a continuation play. So anytime a stock is running, there's a lot of volume, there's a lot of volatility. I like to see if that volume will continue. And so if you look at the daily chart, right, on this particular day, this is the earnings day, right? So I knew that we were close to the all-time high breakout. We weren't actually there, but I was really interested in watching this first day. And so on that first day, I just watched to see how the stock performed. As you can see, it opened really strong and then it kind of sold off. But really what interested me was this consolidation period right here. And so I eventually got long with the idea that it would eventually break the opening range highs. And if it broke the opening range highs, then I knew that it had a chance to test all-time high. And if we break all-time high, it is off to the races. So the way I traded this, I believe I had a whole bunch of trades, but I basically traded the weekly 175s and the 200 calls on the earnings day. And then I gradually scaled out of my position, which as you can see, I use TradeView sometimes because it helps me plot my trades in a format that I can follow. Overall, I can grade myself on this trade, and this is an A setup for me, and I executed probably not perfectly, but this is something that can help you, is that you can actually tag your trades so that way you can figure out what is an A setup for you, a B setup, or a C setup. So let me know in the comment section below if you guys want a copy of this trading journal. Maybe I'll leave a link below to where if you want to use the PDF version, it's free and you can download it, and it's something that you can use to help you be successful in documenting your trading related journey. All right, so reason number 4, letting your winners run. Now, I will say this is probably one of the absolute hardest things to do, and that's because trading is both an art and a science, and a lot of times the line is blurred on what is what, right? Where you make your money at is when you let your winners run and you cut your losers as fast as humanly possible. One thing to keep in mind, non-algorithmic traders or human traders trade off 2 things. That's fear and greed, right? Some of the best traders I know, absolute savages, killers, know how to identify when their emotions are interfering with their trade. So they know how to control their emotions with strict risk management, entries, and exits. If it doesn't fit the plan, they get out. So in a winning trade, your fear might kick in that you may give back some of your unrealized profits. And then your greed could also kick in that you think that you can squeeze every single cent out of that rock, and eventually it could turn around and bite you in the butt. A lot of times emotions, you gotta keep those in check. So I'm a huge fan. You always gotta let your winners run until you have an undeniable reason to close it. So one of the ways that I like to get out of a winner is, instead of being greedy, instead of being fearful, is that when my first target is hit, I will automatically sell either a fourth or a half to lock in, right? When you lock in profits, you actually have realized gains on that particular trade, and then you can let a piece continue to run. And 9 times out of 10, that little piece that you let run is usually what makes that trade a home run. Reason number 5 is going to be discipline. Now, I'm a firm believer that you need to be disciplined in all areas of your life. So whether that is waking up on time, whether that's your physical fitness, going to the gym, whether that's eating right, whether that's relationships with people. Because a lot of times you got to be hitting all facets of life to be a well-rounded person. If you're sloppy in one area, it will show its ugly face in your trading. So you got to be firing on all facets of life. And I think discipline is probably the cornerstone to any successful trader. I personally don't think I've ever come across a profitable trader that was not disciplined in some way, shape, or form. It takes an unreal amount of discipline to follow your strategy, to enter a trade, to exit a trade, to follow everything that you set before you to an absolute T. So a lot of times traders may say, hey, well, Brian, I don't have any trading rules. How can I find them? Well, the best way to do that is, if you don't know anybody, you got to find yourself a mentor. You got to get yourself educated. You got to make sure that you are learning the foundation, the fundamentals up front, because if you develop a ton of bad habits, it's going to take a very long time to unwind those habits. So my advice is, get your discipline under control, get a set of rules, start small, and follow the other 4 tips that I gave you guys earlier. So bottom line, the stock market is wonderful. The market giveth and the market taketh, right? The market is very volatile and it creates a ton of trading opportunities, but it can also develop a ton of bad habits. An unskilled trader can be profitable while a skilled trader could be taking losses, right? It happens all the time. So one of the things as a trader that you're gonna wanna develop is that you wanna be able to identify when a string of losses is due to bad strategy or if it's just not your market. The other thing you want to be able to identify is that if a string of losses or wins that you're having are attributable to skill or a bunch of randomness. Because if it's a bunch of randomness, that is not going to win out long term. You don't want to be a trader for 1 month. You don't want to be a trader for 1 year. You're trying to make money 5 years from now, 10 years from now, 15 years from now, because you are developing a skill set that's going to allow you to generate income by dominating the financial markets. All right, guys, so as you can see, I'm extremely passionate about day trading. Day trading was the key for me to get out of my 9 to 5. It was the key for me to investing in real estate. It was the key for me to starting my tax business. Day trading is something that can help provide a second set of income, and I'm extremely passionate about it. So if you guys found value in today's video, don't forget to smash that like button. Don't forget to smash that subscribe button. And I sincerely, guys, I really wish you guys the best of luck as you dominate whatever market you decide to trade. Have a good one.